Here is your Bull and Bear Stock of the Week. An insurance company and a retailer are on this week's agenda to be the Bull and Bear of the Week. Shiraz Mian, Research Director here at Zacks and Zacks.com, with us to elaborate on both of these companies. Well, the insurance company needs no further introduction other than to say Berkshire Hathaway.
That's right.
The only caveat here, these are the Class B common shares.
That's right.
Right.
So it's Warren Buffett's investment vehicle, and
that's the Bull of the Week.
That's the Bull of the Week.
Right.
And the Oracle has been in the news lately for, and the firm has been in the news lately for not necessarily positive reasons. The Warren had some comments about taxes. Berkshire's former senior executive David Sokol had some trading issues and had to leave. And there's been this persistent issue regarding Warren's successor. Mm-hmm. But if you look beyond these headlines and these concerns, you have a company that's extremely diversified in terms of its revenue, earnings, and cash flow base, and provides a very strong exposure to the U.S. economy primarily. You refer to Berkshire as an insurance company, but it's in effect a conglomerate.
Yeah, there's more to it than that.
They do have a very strong insurance core in Geico, in General Re, and all these other reinsurance businesses, but that's not all. They have retailing, they have manufacturing, they have utilities, they have financial services. So it's very diversified in terms of the cash flow revenue that comes through to the firm. And what we have seen over the years, over a very long period of time, that Warren in particular and Berkshire in general has been able to produce consistent returns. Over the 40-plus years that Warren has been running the company, the compounded annual gains are in excess of 20%. And nobody really can match that. They have a system for the companies they acquire. They leave the existing management teams in place, giving them all the operational autonomy that an independent company would need. And what Warren and the management team at the corporate level does is primarily investment decisions and capital allocation decisions. And we know that within the investment world, nobody else could do a better job than him.
A lot of what he does is more of an art form, I think, than...
It is. It's very Warren-centric. He has done an excellent job in grooming and preparing these people. The culture of the company is very solid and very intact. It's very investor and shareholder-centric. Buying the B share gives you entry to a very exclusive club where you can go to the shareholder meeting. Right. And Warren has been making some changes lately. He invested in IBM. He always said that he didn't like or didn't understood the tech world. Right. He's buying back his shares for long. He wouldn't do that. So he's not necessarily stuck to one particular mantra. He changes with time, and all the changes he does are good for shareholders.
And is there a Warren Jr. that we know about?
The junior is not exactly junior. Howard Buffett, his son, who is in the farming business and himself has been doing a lot of philanthropic work in Africa and other places in sustainable agriculture. Warren has appointed him to the board to maintain the company's culture.
I see.
Now, Howard will never be making investment decisions. He's been very vocal on that. He came on TV lately. But yes, there is a Howard Jr. He is on the board.
But not to the extent of the original.
That's right. He is no successor for Warren. And Howard is not being groomed to be a replacement for Warren.
All right. Well, on the flip side, the Bear of the Week, City Trends, is that retailer that I spoke of, CTRN. What are the problems here?
Before I describe the problem, let me say one or two good things about the company.
Okay.
It's well run. They have a clean balance sheet, and I think the beyond this this cloudy period over the next maybe at least 2 years, I think the long-term outlook, if somebody can hold the stock, may not be that bad. But this company is basically a victim of its own strategy. The strategy being they are focused on this urban, primarily African American customer group, and that customer group has been really hit hard by the economic problems that we have had over the last 2-3 years. It has hit every retail group, but that group has been particularly hit hard. It's more Southeast centric. Company is about 120 million in market cap, about 650 million in revenue this year, but its comp, same store sales growth, has been effectively kind of flattish over the last couple of years, has been trending down. Another issue in their strategy, which has become problematic in this environment, is their focus on fashion-conscious consumers. And when you set up your merchandising strategy to that end, then it puts the onus on you to keep refreshing your inventory, and any misstep could result in like some serious inventory pileup, resulting in markdowns, and then that's showing up in depressed margins and weak bottom line. And we are seeing plenty of evidence of that in Citi Trends. The last quarter was weak. The one before that was weak. The company guided lower. So the top line, the comps, the margins, the bottom line, pretty much everything that matters from a shareholder's perspective, the picture for Citi Trends is cloudy. As I mentioned, long term, the company may do good, but over the next year and a half, I would expect the stock to remain under pressure.
All right, and don't forget, we also have the Bull and Bear of the Day. That appears on our homepage, Zacks.com. So if you're not there already watching this video, then you'll want to go there, Zacks.com, and scroll down the page until you see the Bull and Bear stocks of the day. And check back often, because those stocks change daily, at least on the business days anyway. With Shiraz Mian, I'm Terry Ruffalo.